Andrew Holland, the CEO at Avendus Capital, joining us here. Good afternoon, Andrew. This is Nantara. You know, the big global story, of course, is about Apple and the $1 trillion market capitalization. It has managed, the new trillion-dollar baby, the only of its kind in the world. But back home, we're in the midst of an earnings season. What have you made of it so far? Would you say the earnings are back, or, you know, the green shoots are certainly back?
No, I mean, certainly they've been, you know, kind of not better than expected, in expected lines, but obviously showing the first part of the season anyway has been good. So nothing to complain about there. We're expecting earnings growth of about 15% this year, so it's kind of broadly in line with those kind of figures as we go throughout the year. So it's quite pleasing in that respect. And yes, you know, quite a large number of sectors are doing very well. And you know, let's see the rest of the reporting season, but I think what I've seen so far has encouraged me.
Bari. Earnings are in line, but there are a couple of counters which have done better. Let me begin first, you know, because the consumption story is the one we hear so much about. Every fund manager sounding so bullish. But then isn't that going to make all of those stocks far more expensive and overvalued?
Yeah, I mean, you know, in the short term, that could well be the case that, you know, valuations look stretched. But, you know, if you take the consumer stocks, for example, where the P's are in the 50s, you know, for the first time in years, you know, we've started to see double-digit revenue, and obviously that's great for the bottom line as well, which is what you've seen in the results. So really, you've got to take a bit more of a longer-term view here and say, you know, what would that P look like if you were 3 years ahead, and where the earnings would be. So I think that's what a lot of people like us also are doing. And so whilst the valuations in the short term look a bit rich, I mean, 3 years out, they're still compelling. So, you know, that story is not going away. And you know, it's a similar story what you saw in Europe in the kind of 80s, you know, where the likes of Unilever and Nestle really did very, very well, you know, in terms of their profitability, but also in terms of the amount of money you made by holding the stocks, even though they were on similar multiples at the time. So I think, you know, if history is to go by, then, and the consumption story and India's demographics work, then you know, this is a story that's going to run for a lot longer yet.
Hi, it's Karunya as well joining in the conversation. Let's talk a bit about how to play the markets at this point of time, given so much volatility and so much uncertainty across the world. There are so many global micro and macro triggers playing out. How can somebody who's investing in the Indian equity markets deal with the current environment and the current scenario and find value at the same time?
Yeah, that's a great question. I'm not sure you know, that the answer is staring me in the face. But you know, what I think here is you pointed out that there's a lot of headwinds or negatives that could bring down markets, but you know, globally we're not seeing that. So you've had this kind of summer melt up in markets. But that said, if you look across the world, then apart from the Dow, which is up, you know, 2 percentage points for the year, Nasdaq's up about 12, and our market's up about 8. So far this year. Every other market is really in the negative. So, you know, it's not the backdrop, you know, to the global markets is not as favorable as one would think in terms of the euphoria. So, you know, once markets, I think, wake up to the fact that there's a currency war out there, I mean, just look at the Chinese yuan today, again, is down 0.5%. It will be reflected in the markets, and that's where you probably see a sell-off. You know, in terms of trade wars, India is going to be better off than most because we're a domestic-driven economy. So relatively, we might not fall as much as, say, other emerging markets who are exporters. But you know, we're going to see a fall at some point. But at the moment, markets globally, including ours, are just ignoring all the negatives and enjoying the ride for the time being.
Okay, Andrew, on that note, we'll let you go. Thanks much for taking time out to chat with us about how to play a market like this.